the generalist kind of model, like, oh, I provide all benefits. I think that's sort of going away as we talked about niches in our
Can you
open.
can you get
Yeah.
detailed about that?
Yeah. So you may have what's traditionally called, this should be the air quote episode. I'll make the air quotes here, like
Air
the
quote.
benefits broker type of thing, who comes in there and is like, dealing cards. Like, what do you want? You want health insurance? You want payroll? You want
Right, health
401k,
insurance,
whatever,
right.
that sort of stuff. And I think that old model of just kind of bundling everything together and getting all these big, massive savings. And for me, it's been my experience, what you get is kind of a low end boilerplate kind of stock, whatever. And there's still in our business specifically, there's a semi-technical term of being bundled versus unbundled. So you can kind of combine some services just in the retirement plan space. But my business is all retirement plans. We don't do health insurance. Just for me, my goal is to be the expert in the retirement plan space, and then anything where I'm not is to bring that expert in, right? So it's not.
Well, what is the benefits team look like? If a typical company today wanted to be relatively well-rounded for a benefits, air quotes again, benefits plan or package for their, this manufacturer, 15 employees, 10 part-timers, 5 full-timers, and a self-employed owner, right? Sole
Yeah.
owner. What constitutes a benefits package? Where do you fit in there? And then where do you fit in making the relationships or the introductions to the, what is, like, just to paint that picture.
Yeah, that's a really good and remind me later to talk about a book that I'm reading, because I wanted to bring this up to you too. But
Oh, nice.
sort of falls on those lines. But I think initially with a small business, so you're opening a small business, you're in the strip mall, you're hanging out a shingle, whatever that is. Usually there's like a textbook way to do it probably, but usually it comes down to whoever you might have a relationship with. So let's say somebody knew me, they were my neighbor, and they said, hey, I'm opening up a business. Can you come in and talk about benefits? So then their initial contact is me. So I'm going to say, all right, well, you need a payroll system, right? So you're either going to either do it yourself, which I probably wouldn't recommend, or you're going to,
Remember those days.
some of your accountants, or they may have somebody who does payroll in-house. So that might be a fit, or you might be on a payroll platform. So that's going to be an item. You're going to have your retirement plan, which I'll handle, and you're going to have your health insurance. So those are probably the three core
spokes.
functions.
Okay.
Yeah. I mean, from there, you might get into, if you were offering some sort of group disability plan, a group life insurance plan, or
Life insurance,
something
right.
like sort of next level. But I'd probably kind of start with those three. Just
And
because.
now the payroll person, what is that? And I know that may not be your space, but I feel like you orbit in that space, right?
Yeah.
So just so we're complete in this messaging, the payroll person makes sure that the business is collecting payroll taxes, income taxes for the individuals, right?
Yep.
And but then they're also helping in all of the other, well, in the or the health insurance and the retirement, they're also helping making sure that the money's being routed appropriately, right?
Right. And that's when you sort of get into the weeds, and obviously there's some sort of crossover services, but you want your 401k to be able to talk to your payroll solution. You want those to be integrated. So the simplest form would be zero integration, which is typically you're downloading a file from your payroll and then maybe uploading that to your 401k. So even in the worst case scenario, it's maybe 10 minutes of labor, which isn't the worst thing in the world. And then your next level is what they call a 180 integration. So that's typically where the payroll company talks to the 401k company, meaning they submit the contributions, but there's no talk back. Meaning if Eric goes on and says, I'm contributing 3% of my pay, goes on the 401k system, I want to contribute 4% of my pay, the 401k system will email the business owner and say, hey, update Eric's stuff for him. And then the business owner will update Eric's stuff in the payroll. So that's what's considered a 180. So kind of picture that circle going around. Okay. 360 is where the payroll company and the 401k company talk back to each other without any sort of labor involved on the business owner. So you might say, well, ideally that's where I want to go, right? It's because there's no involvement from the business owner. But I've also seen that sort of come off the rails once in a while too. So again, it's not a black and white world. I've seen somebody come in 6 months later and say, I upped my payroll contributions from 3 to 4%, and it never happened. And then the record keeper says, well, I emailed the payroll company, and the payroll company said, oh, the file wasn't in the right format. And the business owner's like, I didn't know. I thought it was 360. I'm out of the circle. So, again, in a perfect world, all that stuff works, but we don't sort of live in a perfect world.
So
But
I was just licking my chops, or when you started
I
talking
know
about integrations.
processes and
When you talk about that's what I love. So can you talk about specific platforms? How does that work? So I'm thinking ADP, Paychecks, whatever payroll platforms there are, and then like you're the retirement planning vendor, is that,
Mhm.
or if you will,
Yeah.
and so there's some bank account. Is there one bank account that manages all of the contributions to the employees? That there's like the ledger uh, controls the known allocation of the total, or is there a bank account for every employee that's under the management of the 401k plan? How does that work?
Yeah, usually it's so the company will have a bank account, obviously the company's corporate account. Some of them will have a separate one that's just benefits in and out, and but usually early on they'll just have that one corporate bank account. So it's usually one ACH that goes out. So you got 5 employees doing $1,000 a week. It's one ACH, and it'll say 401k ACH out of the company bank account.
5 grand or 5 transactions of a grand
Five,
apiece?
yeah, one transaction, one ACH.
Okay.
So that'll go out of the business owner's bank account. And then to if you really want to get into weeds, there's a custodian behind that who's usually not the 401k platform. So that's a bank or a brokerage company behind that. And then the 401k platform, I always say think of that as a technology platform that sort of lays over some existing infrastructure. So a lot of the 401k platforms, they'll use like a company called Matrix, which most people haven't heard about, but they're laying their 401k infrastructure on a banking or a brokerage infrastructure. So the money will go out to Matrix, and then 401k provider will connect with that. So the payroll providers, I mean, everybody's got their pros and cons. I mean, with the payroll providers, the good news is they're integrated. The bad news is they're integrated, right? So when something goes wrong, it really goes wrong. Something when it works, it works. When it doesn't, it doesn't. For lack of a better phrase. So some people will say, "Well, it's all in one spot. I'm cutting out middlemen or whatever." And then the counterbalance to that is you don't have anybody checking it, and there's no sort of checks and balances in there.
Right.
So again, not black and white. And for me, my whole thing is I want to come in. Objectively, so I don't have any preferred payroll provider, 401k vendor, mutual funds, anything like that. But for me, I want everything to work together well, but I also want it to be interchangeable, right? So very similar, I guess, to your system. You want all your softwares to be able to talk to each other, but if your CRM's really honest and truly not working, you want to be able to yank that out and plug something in without disrupting everything else that's working. So I want to be able to swap out a mutual fund, their mid-cap growth fund, if it's not working. And I don't want that to interfere with anything else. I want to be able to, if they're not happy with their payroll provider, I want to be able to change their payroll provider without affecting the 401k plan or without affecting the participant, or, all that kind of stuff. So
Hmm.
it's that balance of integration versus, the ability to swap parts, hot swap, or whatever sort of technology you want to use there. So that's always my balance. I was talking to somebody yesterday, and she has everything sort of separate, right? Which is my preferred method, where all the parts are interchangeable. And she was having this issue with the payroll company. Not anything major, but she sort of went down that path of when it works, it works. When it doesn't, it doesn't. And she had something that was perceived as a minor issue, and they wanted to charge her $500 because that was their base, like special project labor thing or whatever. And I just said, listen, it's working with everything else. If you want another payroll provider, or at least want to look at something, here's 2 or 3 other names. I'm agnostic. I don't get paid on any of that. I don't. If anything, it's a little bit more work for me because I have to make sure all the parts are talking to each other. But I don't. My goal is to make the client happy. But I don't get. Some advisors do. They get that like referral fees or finder fees or any
Right,
of that
right, right.
nonsense. But for
Partner
me,
fees.
it's yeah, it's just not worth it. I just want, I don't want ever any recommendation I make to be clouded by compensation. So
Right.
that's sort of my umbrella. But yeah, I mean, that's the way I approach it. It's not the way every advisor approaches it, but it's make sure everything works together, but at the same time be able to hot swap, I guess, if I
Do
were
you
to make
see
one sense.
do you see do you see any vendors out there that form like a consortium or some sort of or an exit or a business that basically says like there's you the investment advisor, there's the payroll advisor, there's the insurance advisor. I mean, do you ever see any whether companies or like I said, a consortium that whether your local chamber or anything like that?
Yeah, I mean, you see that. You see, well, like we started talking about benefits brokers. You have your local benefits brokers who want to do everything, and they see that as their sales opportunity. And then I've also talked to people in the health insurance space, and they're like, yeah, we want to partner with 401k guys because we don't want to get into that at all.
Right.
So there's no right or wrong way to do that. I don't want to disparage anybody's business model, but then certainly at the other levels, you have record keepers who also own mutual funds, right? So you have like Fidelity has mutual funds, they own a record keeping platform. They're the number one 401k record keeper provider. And that's caused some issues for them in the past as far as conflicts of interest and that sort of stuff. Fidelity's own 401k plan was sued by Fidelity employees for using Fidelity investments.
Mm,
So, and they've all sort of gone through that. To me, I just laugh at that. I'm like, it's not even worth it. Like if I'm Fidelity, I'm going to use all Vanguard funds. If I'm Vanguard, I'm going to use all Fidelity funds with my employees, because how much really are you going to make off your own employees? Like to me, that's just stupid. But
right.
anyway, so they've all, they all sort of have that crossover thing. So,
At what point does a company bring a resource like you in-house? Does that ever happen?
um, I,
Or is that
I would
always an
say,
external resource?
yeah, I mean, bigger companies will have obviously an HR director of some sort. I don't know if 401k plan, I guess if you got to like a mega size, like if you're a Walmart, you might hire somebody to be like, all right, this is my internal 401k person who is, maybe not giving out investment advice, because you don't want to do that at a company level. But you might want to say, this person is in Bentonville, Arkansas, and home office, and they're going to coordinate all the 401k meetings at every location, and they're going to, so probably at that scale. But that's that line you don't want to cross as a business owner at any size. You don't want to be providing investment advice. A lot
So
of them
now
do, but
we keep talking about 401k. Now that's not the only investment vehicle, right?
no, I mean, your nonprofits usually use 403b, which is starting to look a lot like 401k. You have simple IRAs, which are sort of starting to also uh, disperse, or not really. There isn't really a use case for them anymore. You also have something introduced with our Secure Act, which is called the Starter 401k, which is a new vehicle altogether. You also have state-sponsored IRA programs. You
And how
have
much of that do you manage or support? Are you just 401ks
no,
or are you
no. I would say like the 401k. So things like the simple IRA, that was started because 401ks were expensive and complex. But as the complexity and the cost of 401ks have essentially been eliminated, the simple IRA use case just really isn't there. You won't see them started. There's a few in existence that once they're running, they're okay. But the use case for starting a new simple IRA now, I could probably argue at this point, is zero. Um,
Oh, that's
so,
interesting.
SEP IRAs sometimes, which is a simplified employee pension, that's typically a relatively small business. You'll see that scenario because sometimes an accountant will recommend it. Um, and then you sort of have to maybe steer them out of it if it's not the right thing. The SEP IRAs, the accountants like them because initially the contributions were later in the year. So you could, up until October 15th, if you had filed an extension, contribute for the previous calendar year.
Hmm.
So whereas you couldn't with a 401k. So a lot of times early on, they might do a SEP the first year and then maybe convert it to a 401k later on. You've got solo 401ks for small business, which are obviously for a single sole proprietor and a spouse. So you've got that, and again, that comes with a conversation of, do you plan on hiring employees? Is a runway for that? Never. Is it 1 year? Is it 5 years? So that's comes with a conversation. But no, there's a lot of different things you can do with. You've got cash
But you
balance
are the
plans.
resource to discuss all of those options?
Yeah,
Yeah.
because again, I'm usually either getting paid a flat fee or based on assets. So for me, the umbrella that it's under doesn't really matter.